Hello, my friend, and welcome back to my channel. I hope you are doing okay during this COVID-19 period. My first video was an introduction to MACD indicator. In this video, I'm going to talk about the best strategies and time frame for entering and exiting the trade using MACD and EMA indicators. To enter a trade, it is important to know whether the trend is upward or downward. Look at the following examples. In this chart, I installed EMA12 fast moving average indicated with the blue color, EMA26 slow moving average with the orange color. Now, if the price be above the blue line and both of them be above the orange line, then the trend is upward. The same thing here. This is the price, that's the blue line, that's the orange line, that's upward. Here, the same thing. And in contrary, if the price be below the blue line and both of them be below the orange line, then this trend is downward. The second technique that we are going to find out whether the trend is upward or downward is the crossover condition. If the crossover occurs when the MACD line turns up and crosses above signal line and enter a positive area, then the trend is upward and generate a buy signal. So these are the crossover. These are the positive area with the histogram. It shows the histogram is positive and the trend is upward. The trend is upward. Now, if the crossover occurs when the MACD line turns down and crosses below the signal line and enters a negative area, then the trend is downward and generate a sell signal. These points are the crossover generating a sell signal. And this is the indication of the negative area, the histogram. This is the histogram that shows that is negative area. And also these are negative area. And this is downward. This is downward. And these are the three of them, they're downward trend. Time frame is one of the essential part of a trading knowledge. For day traders, using MACD indicator, normally a factor of 4 to 1 is responding reasonably good. And the time frames suggested are D1, H1, H4, H1, and also H1 and M15. Time frame consists of two parts. The first part is long time frame like D1, H4, and H1, which are used to check the direction of the trend, whether the trend is upward or downward. The second one is called the trading time frame, which is one step lower and is used to enter and exit the market. To enter and exit the market using MACD indicator, it is required the following steps. 1. First, determine the direction of the trend using H1 or higher time frame. 2. Go to one step lower time frame like M15 and select those MACD signals that are in line with higher time frame H1 and enter or exit the market and ignore the opposite signals. You may even go to one step lower time frame like M5 to see those enter and exit signals more visible. Enter the market using crossover buy signal. If the MACD line intersects the signal line while going upward, it generates a buy signal. If this intersection occurs below the zero line, it means the beginning of an upward trend. and the buy signal generated is stronger. If this intersection occurs above the zero line, it means the upward trend continues. Let's have a few examples. In this price chart taken from Yahoo Finance FEC stock, I installed EMA12 blue color, EMA26 orange color, and MACD indicator with 12, 26, 9 parameters and H1 time frame. Between the two blue arrows, these two blue arrows, you see the trend. The trend is upward. From here, you see that the trend is upward. And 5 days trading is chosen, and each candlestick represents 1 hour trading, since the time frame is H1. To see when is the right time and position to enter the market, we have to go to time frame one step lower, like M15. This is exactly the same chart as previous one. The only difference is each candle represents 15 minutes of trading, since the time frame is M15. And the distance between the two arrows is also 5 days trading period. Now, in order to enter the market, we choose those crossover which are in line with the direction of H1, means upward, and ignore the rest. Any of the direction which is downward, we ignore it. As indicated in the graph, there are 2 points to enter the market. So these 2 points are here, that's one, and this is one, and also there are 2 places that is upward, one of them this one, another one and this one. So we ignore these one, we ignore it. Enter the market using crossover sell signal. If the MACD line intersects with the signal line while going downward, it generates a sell signal. If this intersection occurs above the zero line, it means the beginning of a downward trend, and the sell signal generated is stronger and more pronounced. If this intersection occurs below the zero line, it means the downward trend continues. Let's have a few examples. In this price chart taken from Yahoo Finance FEC stock and H1 time frame, I installed EMA12, EMA26, and MACD indicator with 12, 26, 9 parameters. Between the two blue arrows, as you see, the trend is downward. Look here, downward. And 5 days trading is chosen, and each candlestick represents 1 hour trading. To see when is the right time and position to exit the market, we have to go to time frame one step lower, like M15. This is exactly the same chart as previous one. The only difference is in each candle represents 15 minutes of trading, since the time frame is M15. And the distance between two blue arrows is still 5 days trading apart. Now, in order to exit the market, choose those crossover which are in line with the direction of H1, downward. Ignore the rest, any upward trend, we have to ignore it. So we see that there is only one point that we can exit the market, and that point is right here. And this is the direction downward. And we have to ignore these one. Second most common method, generating buy or sell signal. If the MACD line intersects and crosses with the zero line and enter a positive area while going upward, it generates a buy signal. At this point, we see the two EMA on the price chart also crosses each other. If the MACD line intersects and crosses with the zero line and enter a negative area while going downward, it generates a sell signal. In this case, also the two EMA on the price chart crosses each other. To enter and exit the market, we use the same technique as I explained before for crossover. Divergence occurs when the price action is inconsistent with the MACD oscillator trend. Divergence basically is an alert telling you that there is something is not right between the price trend and the indicator. It doesn't tell you to make a trade. It is only make you think twice in your trade. In most cases, divergence is telling you the trend is about to end and is divided into two categories, regular and hidden divergence, each of which is positive and negative. Here is another example of Yahoo Finance Apple stock. It is clearly seen divergence between the price chart and MACD indicator. The price trend here is upward, whereas on MACD indicator, the price is downward. So we see a divergence here. In this chart, we see regular divergence and hidden divergence positive. In this graph also, we see regular divergence and hidden divergence negative. If you enjoyed this video, thumb up and don't forget to subscribe my channel. Thanks for watching. Take care and see you next time.